Good morning, everyone. Welcome to today's lecture. So today, what we are going to do is we're going to continue Schedule 3 that we were discussing in last lecture. Okay. Plus, after this, we will take up the next topic. We'll see that. So, guys, just a quick recap. Till yesterday, what we did is we started Division 1, Part 1 balance sheet, where we were discussing for, notes to account with respect to liability side, like trade payables, short-term borrowings, long-term borrowings. Remember, we also discussed that in equities and liability side in Division 1, Part 1, we go with a reverse order of the liquidity preference. That means the most illiquid liabilities, or you can say the most long-term liabilities, will be the first, and then we will be short-term liabilities that are required to be paid in near future will be shown afterwards. Compared to Division 2 starts with the asset side first, and Division 1 start with the equities and liability side first. Remember anything, guys? Okay, so guys, as also I discussed in last lecture, please read this. Before the lecture, read this. Come up with your questions. I will be also answer your questions with this topic, with previous topic. That will be fine. So, guys, you can post your questions, and I will be taking up as and when you will post it. Okay. So, let me then. Okay, let me then move forward. Okay. So till the last lecture, we discussed regarding the trade payable, and there was an amendment in trade payable. What was the amendment? Now we are required to give aging schedule. Now we are required to give aging schedule in trade payable, which was not given till now, which was not present till now. But from this time, it will be present. Clear? Okay, so moving ahead. Then other current liabilities. As per the Schedule 3, Division 1, other current liabilities shall be classified into current maturities of the finance lease obligation. Okay. Interest accrued but not due on borrowings, interest accrued but due on borrowings, income received in advance, and unpaid dividends. Then there is the application money received for allotment of securities and due for return on interest thereon. So there is a very big, disclosure is required on that particular head. Then unpaid matured deposits and interest accrued thereon, unpaid matured debentures, and other payables. If you see, I'll give you a quick understanding of this particular note to account, other current liability. So if you see onto the balance sheet also, I'll take up to you the balance sheet again. Yeah. See here, long-term borrowings, deferred taxes, again altogether different. Other long-term liabilities, long-term provisions, for short-term borrowings, payables, okay, and provisions. Now, anything which is not either a borrowing or a provision will fall under the head of other current liabilities in case of a short term. I say this is not even the payable, this is not even the borrowing, this is not even the provision. So remember three things. One, either it can be a borrowing, so we have a separate head for the borrowing. Either it is a payable, we have a separate head for payable. Either it is a provision, we have a separate head for provision. Okay. So borrowing, payable, and provision. These three have a separate head. Other than this, if you have anything additional, which is your liability, current in nature, then majorly it will go into other current liabilities. I'll show you. See, current maturities for finance lease obligation is the amount that you are supposed to pay within next 12 months. So that's the one thing. But interest accrued, It's neither a borrowing, it's neither a my payable, it's neither my provision. Interest accrued and due on borrowings. Income received in advance. Unpaid dividends. Application money received for allotment but due for refund. Unpaid mature deposits and interest thereon. Unpaid mature debentures and other payables. So these are the items which will be classified under this particular head. Then short-term provisions. Okay, short-term provisions, as its name stated, it will be either provision for employee benefits or other provision that you need to specify the nature. What is the other provision? So that was a particular liability side for the part 1. We covered the equity and liabilities, where we discussed shareholders fund, we discussed non-current liabilities, and we discussed the current liabilities. Any doubt till now? Any doubt, guys? Guys, remember, the more you will ask, the more you will learn on these things. So always ask. Okay? Nope. No issues. Let me move forward then. Okay. Now, starting with the asset side, which talks about plant, property, and equipment first. Now, if you see, okay, okay. Sorry. Over here. Yeah. Now, if you see on the asset side, first you have a non-current assets. Okay. The nomenclature earlier from the fixed asset has been shifted to the plant, property, and equipment. Intangible assets, capital work in progress, intangible under development. Like same way, for tangible you have a capital work in progress. For intangible you have intangible under development. Non-current investments, deferred tax assets. Now, if it was a liability in case of a deferred tax net, then you show a liability. If it is an asset, then you show a asset. But deferred tax liabilities are shown into the non-current liabilities. Same way, deferred tax assets are also shown under the head of non-current assets. So deferred tax is either non-current liability or is either non-current asset based on your net position. Okay. And then long-term loans and advances and other non-current assets. So this is particularly overall non-current assets heading, and these are the subheadings that are required to be shown. Okay. Now let us discuss each one by one. What will be the items under each of the category? Over here. Yeah. As plant, property, and equipment, as the name suggests, it's a fixed asset. The company which will be having, the fixed asset the company will be having. Simple. But having said that, not only that, but you need to provide the bifurcation of fixed asset on these classifications: land, building, plant and equipment, furniture, fixture, vehicle, office equipment, and others. So if you see, you need to provide bifurcation based on this. It's pretty easy to remember. Okay, pretty easy to remember. I'll tell you how you need to remember is simple. Land. So think about the distinct asset that you can have. I can have a land, I can have a building, I can have a furniture, I can have a vehicle, I can have a plant and machinery, and then the last one is the office equipment. That's it. Okay, it's easy to remember, nothing hard. So these are the classification under which the fixed assets are required to be, divided. Then lease shall be separately provided, lease shall separately be disclosed. Sorry. asset under lease shall separately be specified for each class of asset. Now, if there is a lease asset, then you need to separately disclose for each class of asset. Important. A reconciliation of the gross and net carrying amount of each class of asset at the beginning and at the end of reporting period, showing additions, disposal, acquisition through business combinations, or you can say revaluations, then aggregate amount and aggregate net carrying value of each class of property is required to be disclosed, okay, along with depreciation and impairment. Now what that means is, it says simple, a reconciliation of gross and net carrying amount of each class of assets, gross and net at the beginning and the end. So what is say this opening balance, let's say it's a class of asset, let's say land, not land, plant and machinery, okay, it's a plant and machinery. Now opening balance plus additions, okay, then you can say deductions, then if it is revaluations, you will get closing balance. Now this will be gross carrying value, okay, this was also gross. Then what you do is, for depreciation, provision of depreciation, opening balance, addition means current year's debt minus, if you if you sell a asset, you reverse any depreciation or anything, so deduction from provision, deduction from depreciation provision, then you will get closing balance of depreciation. And when you net these both, this and this, what you will get, opening net carrying value, and you will get closing net carrying value. This is how a reconciliation is provided, okay, this is how a reconciliation is provided. Also I can have, if I have a live example, just let me see. Sorry, yeah, see this way, the way I was talking about. If you see over here, year end 31st March 2019, gross carrying value, opening balance, additions, deductions, closing balance, then accumulated depreciation and amortization. For that, opening balance, depreciation and amortization for the year, deductions and closing balance. Then you get, if you take this balance, yeah, over here, if you take this balance from here, this closing balance, and if you take this closing balance, you can get net closing balance over here, sorry, over here, net carrying value over here. So that was for March 2019, and same way I'll repeat for March 2020. Gross, opening, additions, deductions, transfers, I'll get a closing over here. For depreciation, I'll perform same, again I'll get a closing, and when I net both of these, I'll get a carrying value. So this is a reconciliation, opening, closing, gross, net, showing everything. Any doubt? Any doubt? Srinidhi, can you a bit elaborate more? What is the doubt in this particular area? What do you want to understand? So it will be for easy for me then, take up this particular question again. Yep. Any other doubt, guys? No? Okay. I think I need to ask a question. Okay. Just a minute. Let me. Okay, then. I'll complete this and we'll take up one question. Okay. After this. Okay. Now, the next point is where, if there isn't any reduction of capital or revaluation of asset. Okay. Any amount has been written off or any amount has been added due to revaluation of asset. Okay. Then the corresponding figures, okay, or you can say the applicable figures you need to show by way of notes also till there is a provision also for the first 5 years that you show such reduction and increase was there. Okay, so whenever there is a revaluation, whenever there is a reduction in capital, whenever there is a change in asset balance on account of revaluation, by way of note you need to show the amount of increase or decrease that was there till for the first 5 years. Mm, any example for this? If I have just a minute. No. Okay. No issues. Unfortunately, I don't have an example for this, but yeah. Okay. So yep. So you need to show by way of note in below your schedule. Any doubts, guys? No. Okay. So what I'll do is let me bring up one question and then we can move forward. It will be help you to understand this particular topic, this particular example. Okay, no issues. Okay. Uh, now, let's say for example, during the year, okay, during the year, ABC Limited. Now, to ABC Limited, let's say my division 1 was applicable. Okay, ABC Limited was preparing his balance sheet or financial statement. Okay, now while preparation of the financial statement, ABC Limited decided decided to show trade payables. Decided to show trade payables as per the new amendment in a aging format. So they decided, okay, for our company, the normal aging is a bit of not applicable because we have a different sort of business. So that's why let's follow a new sort of aging. So what they did is, particulars, they said, okay, in our business, most of the trade payables usually go for 3 years in the normal terms. So we let's say start with the bucket for 0 to 3 years. Then they say 3 to 5 years and 5 to 10 years. And then they said okay, now MSME others, they disclose this much of the amount in their schedule. Okay, that's it. Total trade payables. This was the disclosure for trade payables. Now what they also did is they thought, okay, we are giving this aging, then there is no need for further disclosure of the trade payables anywhere. So while preparing their balance sheet also, okay, what they did is they disclosed under the head of current liability, they disclosed under the head of current liability as a trade payable. Like I'll show you over here. Because they were saying that it's a duplication of disclosure. So they will only disclose once under the head of current liability, simple trade payable, and they will provide the reference for this particular item over here. So let's say for current liabilities, okay, under that you have various, okay, now they disclose trade payable, let's say 150, okay, and the rest of the like short-term provisions, and same way for rest of the disclosures. Okay, this was how it was disclosed in balance sheet. Now you tell me whether this is appropriate or not. Whether this is appropriate or not. So what I did over here is, or what the management of APC Limited did is that they disclosed first of all schedule with this aging, because they are saying that this aging is more convenient to their business. Number two, on balance sheet, face of balance sheet, they disclose trade payable with a single line item. They are saying already we have disclosed the details in the notes, then there is no need for the disclosure again. So you tell me guys whether this is appropriate or not, and what is the area which is not appropriate. Come on guys. Srinidhi, it may be on the discounted price reason, because see, let's say for example, I have purchased share on 100 rupees, but due to some reason I'm supposed to sell the share because it may not have that much of value as of now, or it may be discounted price. It depends upon the case. Okay, so today if I say okay, the net book value or the market value of that particular share is not that much, so I have to sell below my purchase price. So it depends upon case to case whether this is a discounted price or it's normal market price which is below my current purchase price. Come on guys, tell. So in the current case, what will be the appropriate uh, thing to answer? Now whether this disclosure is appropriate or not. Whether this disclosure is appropriate or not. Come on guys, pretty easy. This was a part of the amendment that we discussed just now. So, this is a part of the amendment we just discussed. Correct, Jay? Come on, guys. Come on, come on. And I will also guide you how to write this particular, questions answer in exam. Come on, fast, guys. Now tell you why this is, I'm asking this particular question is reason because this will enhance your understanding. First of all, number two, it will, when you will think, okay, whether this is as per my division one or division two that we will going through we will go through with the division two also. You will analyze, okay, if what is missing. Once you will see, okay, this was in division one, this is missing, okay, this should appropriate or not appropriate. It will really help you to, remember or you to understand the topic. Come on, come on. Okay, no issues. Okay, so how to answer? Okay, whenever such questions comes in exam, what you need to do is remember in previous lectures also I have provided you, okay, how to answer this particular question. First, you need to provide details of provision applicable. Okay, for example, in this case, it will be let's say for example, ABC Limited is a company registered under Companies Act, and as per the details given, my division one of Schedule 3 of Companies Act will be applicable. Okay, for preparation and presentation of its financial statement. Now, this is a scenario. Then you need to mention, okay, as per the recent amendment, or you can quote even, if you remember which amendment we are talking about. Let's say, for example, Companies Amendment Act 2021 or 2020, whatever it is, you need to, if you remember, you can quote. Otherwise, if you don't remember, it is perfectly fine. Just you can say, as per the recent amendment in Division 1, Schedule 3, okay, the companies to whom the Division 1 is applicable are required to disclose, okay, this particular schedule, what we are talking about in the particular question, let's say trade payable schedule or notes to account. Okay, notes to account and a note. See, whenever you are quoting any of the provision or any of the, try to keep the exact same word. So for example, I'll tell you, they are saying as a trade payable aging schedule. Okay, so you need to say that, okay, trade payable notes and trade payable aging schedule, they are required to disclose trade payable notes and trade payable aging schedule in predefined format, yeah, predefined way, whatever it is. Okay, which is mentioned below. So then you provide what is the actual format which is required to be given. Fine. Then explain what is in the current case. What is in the current case? ABC Limited has disclosed, let's say whatever there was given in the question, current case. Then you analyze, okay, where it went wrong. So where there is non-compliance. You provide that area and you explain, okay, this is the area where there is a non-compliance pertaining to this particular guidelines, provision, or in our case, it's a Schedule 3, non-compliance to Schedule 3. And hence you can then give your conclusion that there is a non-compliance with respect to the Schedule 3. Clear? This is how you can draft your answer and you can present your answer. Any doubt, guys? Yes, Jay, it's a part of notes. That is the amendment we are talking about over here. Clear? So this is how you need to attempt an answer, or this you need to provide. So always understand, make a flow of your answer, like what was the provision, what is the case, and provision supporting your case. Then compare both, give a conclusion. So over here, provision, okay, then current case, compare both and provide what is there, what is not there, and then give your conclusion. Simple. Okay, no issues. Then let me move forward. Okay, next item was intangibles. Remember, plant, property, equipment, then intangibles. Now we'll discuss about the intangibles. Okay, intangibles, what are the classification? Goodwill, brand, trademark, computer software, mastheads and publishing titles, mining rights, copyrights. Okay, then recipes, formulas, license and franchisees and others. Same way, like we saw a reconciliation of the gross and carrying amount of fixed asset, same way you are required to give a gross and carrying amount reconciliation for the intangibles also. So reconciliation same as I'll not write fixed asset, I'll write PPE, property, plant and equipment. Okay, so guys, if you try to answer or try to use those terminologies which are used in that particular provision, regulation or guidelines that we are talking about, reason because it will enhance your understanding. I can say fixed asset. Okay, I can quote a term fixed asset, I can use the term fixed asset, it will mean the same. But why plant, property and equipment? Reason because fixed asset can be of various type. Okay, I'll show you the difference over here. Why not fixed asset and why plant, property and equipment? Okay, when I say fixed asset can be again can be of tangible, can be of intangible nature. Okay, then I can say fixed asset, it's again can become my fixed asset work in progress, or intangible work in progress. So fixed asset can be both tangible and intangible. However, we have a separate headings for both over here. That's why we are showing plant, property and equipment. These becomes your plant, your property and equipment, your tangible only. You cannot have a plant which is intangible, you cannot have a property which is intangible. Okay, or you cannot have a plant and machinery or equipment which is intangible. So that's why I'm giving a head of plant, property and equipment which is by default a tangible and then intangible asset, rather than showing only fixed asset, because fixed asset may include intangible also. That's why I have changed my nomenclature. I'm showing plant, property and equipment. Okay, so try to use these terminologies because this will enhance your understanding. Even whatever you want to write, it will enhance that understanding also. Okay, so a reconciliation same like plant, property, plant and equipment. Okay, then again, if there is a reduction or if there is a revaluation, then for the first 5 years, you need to show that revaluation or that reduction as a note. So in case of a reduction of capital or revaluation of asset, okay, you need to show reduced or increased figures by way of a note for the first 5 years subsequent to the date of reduction and increase. Clear? This was my intangibles. Any doubt till now? Any doubt? Any doubt, guys? Appropriately corrected. Yes. Give the provision, give the facts, do the analysis, and provide your conclusion. Any doubts, guys? Guys, the more you will ask, the more you will learn. I'll tell you, ask as much as you can, because it will enhance your understanding. Trust me. Okay. Also, please provide the feedback. Please provide your feedback so that we can understand, okay, what additional you need and what additional what we are doing good and what we need to provide you additionally. Please provide your feedback, guys. That is really helpful for us. Okay. Let me continue then. The next part is non-current investments in my balance sheet. Okay. Non-current investment, again, I need to provide, okay, either it can be a trade investment or other investments. I need to classify whether there is a trade investment or other investment. And then in the each category, I need to further subclassify as an investment property, investment in equity instruments, preference shares, government bonds, debentures, mutual funds, partnership, and non-current investment. Okay, other non-current that I need to provide. Okay, so first thing I'll do, whether it's a trade or other investment, then I will provide this particular bifurcation: investment property, investment in equity shares, investment in preference shares, investment in government securities, then debentures and bonds, like this way another. And again in other investments, again same, I'll repeat these items over here: equity shares, investment in preference shares, investment in government bonds, government securities, investment in debentures and bonds, then mutual funds, okay, and partnership firms, and like this way. Okay, now additionally what I'm required to show is, under each classification, let's say for example, under investment in equity instruments, I need to give the names of the body corporate, whether also I need to indicate whether such body corporates are subsidiaries, associate, joint ventures, controlled special purpose entities in whom investment have been made, nature and extent of the investment made in such each of the body corporate. Okay, now why this detail is required is reason because it will give clarity to the company. Okay, these are the non-current investment. Now there may be a trade investment or there will be a other investment. Okay, now if company is investing the money of the shareholder, okay, in some of the companies, in some other companies, then which are those other companies? That stakeholder needs to understand that, okay, if I am being A Limited, if I am giving a money to another company, I am investing in another company, let's say B Limited, then the details should also be given to the stakeholders. Okay, I have given money to the B Limited. I cannot just show on my face, okay, I have given money, but to whom? That is why I am required to provide the name of the body corporates and the relationship also, whether it's a subsidiary, associate, joint venture. Okay, it helps in understanding, okay, where the money is going. in the nature of investment. Clear? Clear? Any further doubt? Okay. Then what additionally I am required to give is, in regard to investment in capital of partnership firms, the name of the firm, name of their all partners, total capital, share of each partner shall also be given. Means I need to provide the details of partnership firm also. Reason because let's say today if I'm investing in partnership firm, what if the partnership firm is a related party? What if I'm transferring the money from the company to my own partnership firm, or a partnership firm where I am or my any of the relative is interested or is a partner? This will show you that detail. Okay. Then investment carried at cost, investment carried other than at cost should be separately stated, specify basis of valuation thereof. If you are carrying an investment which is other than cost, let's say fair market value, net realizable value, or any other way of valuation you are doing for that particular investment, then you need to provide the basis and valuation thereof. What basis and valuation thereof? Okay. This is also required to be disclosed is aggregate amount of quoted investment, aggregate amount of unquoted investment, aggregate provisions of diminishing value of investment. Quoted, unquoted, and provision for diminishing in value of investment. These three items are required to be provided for each and every investment which is you have disclosed above. Clear? Any doubt? No, it's not for the 10. Okay, let me show you. What provision says that amount of change due to revaluation, if change is more than 10% in the aggregate of the net carrying value of each class of property, plant, and equipment. So it talks about for the revaluation. If more than 10% is there, then show the amount of change due to revaluation. Otherwise, you can club it into the other adjustment. Okay. No need to show as a separate head for the revaluation. Clear? Any doubt, guys? Quoted investment means for which you have a price available in the open market. You can say, the investment is listed. You can say, when I say a quoted means, price available on the stock market, or, when we say a quoted means amount is quoted of that particular investment on the share market or stock market. And when I say quoted means available with present on that particular stock market. Okay. That's a sort of quoted investment. Any doubt? Any doubt? No? Okay. Okay. Now this was for the investments. Then we'll move toward the long-term loans and advances. What we are required to disclose in the long-term loans and advances? First, you need to classify whether it's a capital advance, loans and advance to related parties, or other loans and advances. Either it's a capital advance. Now, what is a capital advance? Advance given for capital assets, you can say that. Okay, advance given for non-current assets. Loans and advances to the related parties. and other loans and advances. Again, these are required to be disclosed as a secured, considered good, unsecured, considered good, and doubtful. Allowance for the bad and doubtful loans and advance shall be disclosed under the relevant heads separately. If there is an allowance for, doubtful loans and advance, then you need to disclose it separately under each head. Okay. So, for example, let me see I have a live example or not. Just give me 1 minute. Okay. I'll just provide you over here only. Okay. How they are disclosed in the notes to account is, let's say for example, this is my particular note that we are discussing, long-term loans and advances. Let's say note number XX as of now. Long-term loans and advances. Okay. Now, how I'm supposed to disclose this? First of all, I need to provide the category wise. Capital advance. Now, again, when I say capital advance, I need to provide whether it's secured, considered good, let's say 100 rupees or 1000 rupees, then unsecured, considered good, okay, let's say 200 rupees. Then I might have sorry. Okay. Then again, I will have the third bifurcation, doubtful. Now for the doubtful, if that, let's say 300. Now I need to provide separately details of the allowance for the doubtful one. So what I'll do is allowance for doubtful capital advance. Let's say this one, 300. And the net amount will be disclosed as my capital advance. So this is how you need to disclose. Then if it is capital advance, then the next category, loans and advances to related parties. Same I will repeat. And the third one, whatever third one, that the other one, okay. My other loans and advances, same I need to repeat. Then there is an additional requirement which says that loans and advances due by directors and other officers of the company. Okay. In respect of which director or any partner or member should be, is jointly or severally responsible, then I need to separately disclose the same. So loans and advances which are due by director or other officers of the company, or any of them are involved or are jointly or severally liable for that particular amount, okay, then I'm required to provide that detail. So if any of the my director or officer of the company is involved in any of the loans and advances, then I need to provide the detail of the particular which director or officer is involved over here. Clear? I need to provide separate details for that reason, because it will enhance the understanding of the stakeholders. Okay, what we are talking, which director or officer to whom it is given, like loans and advances to whom, to which director or officer the company has provided. Clear? Any doubt? Any doubt? Any doubt, guys? I think J capital advance, as I told you, you can consider, okay, advance for by fixed asset or advance given or for some capital item or a non-current item. It is related to a non-current asset, and it's a advance you are given for any non-current asset. That can be a capital advance. Clear? Any further doubt, guys? Okay. Thank you, Mahendra. Oh, no issues. Let me move forward then. Remember now other non-current assets. Okay. Other non-current assets. First of the thing you will see long-term trade receivables. Long-term trade receivables means trade receivable for which the amount will not be there in the next 12 months, but they are for the long term. We may receive after 3 years, after 5 years. So there are trade receivables where we will receive amount after a long period of time. It can happen in your companies where they are involved into the very big projects, infrastructure projects, construction projects, turnkey projects, something like that, where they have a deferred credit terms. Deferred credit terms means they will be paying amount after 3 years. You hand over the project, they will use the project, but payment will start after 3 years or 5 years for that particular project. So there are agreements, or there are terms and conditions. So you can consider those as a long-term trade receivables. Then security deposits. Again, when I say other non-current assets, they are usually of non-current nature. So security deposit of non-current nature. Others, if you need to specify, okay. Now, when I say long-term trade receivable, you need to again specify whether it's a secured considered good, unsecured considered good, or doubtful. And if any of the allowances is there, you need to provide separately for details for the allowance for the bad and doubtful debts. Okay, under relevant head. Same way, if there is a due by director or officer or any of the person of the company where they are jointly or severally liable, then you need to disclose them separately. Okay. Important amendment now. For the trade receivable outstanding. Now, which are these trade receivable? These are the long-term trade receivable we are talking about. This one. This long-term trade receivable we are talking about. So for the long-term trade receivable, okay, this aging schedule is required to be given same as my trade payable. Undisputed trade receivable considered good, undisputed trade receivable considered doubtful, Disputed trade receivable considered good and disputed trade receivable considered doubtful. Now, why doubtful and considered good for secured and unsecured? Sorry. Reason because remember in my trade table, I was talking about MSME. Here I am talking about considered good and considered doubtful and disputed and undisputed. So two bifurcations. Either it is your considered good or considered doubtful. Second bifurcation, disputed, undisputed. Clear? Now earlier it is given that you need to calculate this aging from the due date of payment. However, if you don't have that due date of payment, you can take the date of transaction and you can calculate the aging. Any doubt? This is amendment. This was not present earlier. This is a new requirement that is required to be followed from now. Any doubts? Any doubt, guys? Okay. Thank you, Jay. Thank you, Mahendra. Okay. Now moving to my current investments, current side of the balance sheet, current asset side of the balance sheet. So current investment. So what I'm required to show is same the way I was disclosing for my non-current investments. I need to disclose in the same way my current investments. What it is? Current investment shall be classified as a investment in equity instrument, preference shares, governmental trust or securities, investment debenture and bonds, mutual fund and partnership firms, plus other investments. Now, remember there was one more item earlier. It was investment property, which is not present here because investment properties are by default your non-current. Unless and until it's held for sale and it is going to be sold very soon, and another topic to discuss. But investment property, it's a usually non-current investment, and that's why it's not there in the current investment. Rest all of the things are there. Now you need to again same way provide the details. Okay, name of the body corporates, subsidiaries, associate and joint venture, control special control entities relationship. Okay, you need to provide these details, and in case of partnership firm, you need to provide details of total capital, shares of each partner, names of their partners, like this way. Clear? Then you are also required to disclose the basis of valuation for each investment, aggregate amount of quoted investment, unquoted investment, and aggregate provision made for diminution in the value of investment. Let me show you one live example for this. How we disclose in the balance sheet. Again, this is the India's balance sheet, so there will be difference, but just to show you how they disclose this. See, first I disclose what is the unquoted investment over here. They will say, okay, made as cost means my valuation methodology I'm providing over here, how I'm valuing it. Now, investment in equity instrument of subsidiary companies, I'm providing my relationship also, whether fully paid up or not, I'm providing that also, and then name of the companies over here. How much share I hold, comparatives number, what is the face value and the amount. See, equity shares of this, total number of shares, face value and amount. This is how we are required to disclose the details of investment. Any doubt? Any doubt? Okay, when the disputed means where you are, there's a dispute going on for that trade receivable. Let's say, for example, the debtor or or the party is saying, okay, I will pay you 100 rupees, but you are saying, as per the billing, as per the terms, everything is as per the contract, the amount is 200 rupees. So there is a dispute, although you are showing 200 rupees, but there is a dispute going on. Okay. Investment property, Jay, reason because why we are not disclosing into the current, it's by default, it's a non-current fund into the property, investment in property. It's a by default, it's non-current fund. Unless and until there is a, investment property held for sale, there is another topic. Reason because there are another guidelines that we need to follow to classify any of the asset held for sale. But generally, investment property is a non-current in nature. That's why you are not able to see in the current investment portion. Rest all of the things from the non-current investment are the same into the current investment. Any doubt, guys? Any doubt? Diminution in the value of investment. See, there can be a decrease in the value of investment. Reason because when it's a non-quoted investment, let's say for example it's a non-quoted investment, means price is not available on the stock market. Now the company has incurred huge losses and there is a going concern issue on the company. I need to provide the invest for, I need to provide uh, on the investment that I have done in that particular company. I need to provide for. Okay, when I will provide for, there will be a decrease in the value of investment. That's a, I'm talking about diminution in the value of investment. When there is a decrease because you provide for the investment because of XYZ reason, can be company going into the losses, company got liquidated, or company is not performing well. You calculate the net book value. You do the let's say it is not on the some other value. That's why. So there can be any reason, but this is how it goes. It is. I hope I'm clear, Srinidhi. Okay. Any further doubts? Any further doubts, guys? No. Okay. Let me move forward then. Inventories. Pretty simple. Raw material, uh, finished goods, work in progress. Basic things that we disclose: raw material, my work in progress, my finished goods. Okay. Stock in trade. If I have something purchased for trading, store spare, loose tools, and others. Goods in transit should be shown separately under the each head of category, and mode of valuation shall be shown shall be stated, cost or NRV, whichever is less. Trade receivables. Now these are the current trade receivables we are talking about, not long term but current one. For the current trade receivables, what you are required to disclose? Same details that was available for the long term. Again, this is an amendment. Remember, this is a very important. Okay, you are required to show a trade receivable aging, which talks about undisputed trade receivable considered good, undisputed trade receivable considered doubtful, disputed considered good, and disputed considered doubtful. Less than 6 to 1 year, 1 to 2, 2 to 3, more than 3 in total. Clear? Also, you need to provide details of trade receivables shall also be classified as a secured considered good, unsecured considered good, and doubtful. You need to provide allowance for the doubtful and bad debts over and above this aging. I'm talking about over and above this aging. Aging is required to be given. Plus, you are required to disclose this particular in this particular way also. Like, what is trade receivable considered good? Let me show you one example. Okay, this is again in DS1. I am just referring just to explain you. So unsecured considered good, unsecured credit impaired. So this is not applicable as of now for us. Allowance for credit loss means allowance for doubtful one. this is how we disclose. Okay. Again, unsecured considered good. In this way, we are required to disclose trade receivables. So, secured considered good, unsecured considered good, and doubtful. Then you need to provide what is the allowance you are creating for a doubtful one, and then you need to show the number plus this aging. Clear? Any doubt? Okay, let me move forward then. Debts due by directors, and same way, if any of the officer of the company is involved, you need to separately state that particular amount. Same. Then coming to the cash and cash balances, you need to disclose balances with banks, checks, drafts on hands, cash on hand, and others if there is any. Okay. Earmark balances with banks shall be separately stated. So earmark balances are like marked separately for some particular purpose. So amount reserved in banks or amount reserved in account, which we cannot use for other than for a specific purpose. Let's say, for example, unpaid dividend. I cannot use that money. I need to keep that balance separately, because either now or either in future I need to pay that dividend, or if I'm not paying that dividend, I need to transfer that amount to the investor education and protection fund. Same way, there are certain amounts which I need to keep separately. I need to keep amount in a separate bank account. They are specifically for some specific purpose. For example, amount to be refunded for shares, so share application money which is pending for refund, I need to show separately. Okay. Then balances with banks to the extent has the margin money, security against borrowing, guarantees of commitment shall be disclosed separately. So for example, today, let's say I have given a bank a margin money for a particular amount of borrowing. Then I need to disclose that separately. Repatriation restrictions, if there are any, on any of the bank balances. Let's say I have a foreign currency bank account having foreign currency amount in that particular bank account. If there's a repatriation restrictions, let's say for example, till next 6 months, I will not be able to withdraw that amount from that particular account. I need to disclose that separately. Bank deposit more than 12 months of the maturity shall be disclosed separately. Clear? Any doubt on any of the item? Jay, secured, unsecured, you don't show secured, unsecured in the aging. You show considered good, considered doubtful in the aging. In aging, you only talk about your status of the trade receivable, whether it's the good or the doubtful one. And the second part is the disputed one or not. Clear? Any doubt? Any doubt, guys? Sorry. Thank you, Srinidhi. Guys, the more you will ask, the more you will learn. So please ask as much as you can. Okay. So what is repatriation restrictions? Simple, as I told you. Like, let's say for example, I have a bank account in XYZ country, my neighboring country, or let's say I was having a bank account in Ukraine. Now, because of some scenarios, the banks are freeze. Let's say I was having a bank account in Russia. Now the transaction are freeze. I cannot, withdraw the amount because of some XYZ reason. So there is a restriction on the amount to be repatriated from that particular bank account to Indian bank accounts. I cannot withdraw directly from amount from the foreign bank account and transfer it to Indian bank account. There are restrictions. Let's say in some of the countries, I need to take a permission of central bank of that particular country. Let's say, for example, hypothetical example, let's say China. So there is a hypothetical example. There's a restriction. Okay. Now I cannot just directly withdraw amount from bank account and transfer to India. I need to take a permission of central bank. Then when a central bank will provide me a permission, then only I will take amount. I can withdraw amount from that bank account and transfer it to India. That are the repatriation restrictions. Clear? Srinidhi, Harshad, clear? Point number 5. Savita, can you explain which point 5 we are talking about here? Which point 5? Yeah, it will be part of cash and cash equivalent. There is no repatriation restrictions. See, you can withdraw the minimum cash balance also. Let's say, for example, the minimum cash balance is 10,000. Can I go below 10,000? Answer is yes. Although they will charge me some penalty for not maintaining my average balance, but it's not. This will not be a repatriation restrictions. The money is still available to you. I can withdraw all of the amount and I can close the bank account. Possible. So that will be part of cash and a cash equivalent only. Thank you, Jay. Thank you, thank you, Srinidhi. Harshad. Okay. Savita, in cash and cash equivalent, any specific you want to understand? Bank deposit with more than 12 months. Okay. Point number 5, this one. Okay. So bank deposits with more than 12 months of maturity shall be disclosed separately. Means if in a case of a bank deposit, okay, you have a more than 12 months maturity, then you are required to disclose separately other than these items: balances with bank, checks, drafts on hand, cash on hand, and other. So when I say other, you need to disclose as a bank deposit more than 12 months and when they are getting matured. Okay, that's point number 5. I hope I'm clear. Any further doubt, guys? Okay. Then let me move forward. Short-term loans and advances. So loans and advances to related parties or others, same. Then secured, considered goods, unsecured, considered good, and doubtful. I need to show allowance for the doubtful. Then I need to show where the directors and officers are there as a part of due loans and advances. And I need to separately state that loans and advances with the details of directors or officers involved. Other current asset. If any of the items which do not fall in above items, then I need to disclose over here. Other current asset. Residuary in nature. Again, then I'm going to, I need to disclose for the contingent liabilities and commitments. Okay. To the extent not provided. Why? Because if you have provided, it will be part of your liability, not contingent liability. Simple. So to the extent not provided, it is required to be disclosed here. For example, you understood, okay, the liability is of 300 rupees. Let's book a provision of 100, rest 200, we'll keep it as the same. So rest 200 will be your contingent liability. This will shown as a liability and this will shown as a contingent liability. Clear? So to the extent not provided for, you need to disclose the contingent liability and commitment. So first, contingent liabilities. Contingent liabilities means claims against the company not acknowledged as a debt. Otherwise, if you acknowledge them as a debt, it will become part of your liability. Guarantees, other money for which company is contingently liable. These are the 3 categories for contingent liabilities. Commitment. What is commitment? Commitment means that something you are going to do in future, you have already committed now, but you are going to do in future. So for example, estimated amount of contracts remaining to be executed on capital account not provided for. So for example, let's say you have entered into a contract for purchasing of fixed asset. Now for example, let's say you said, okay, build this fixed asset for me. Let's say build a building for me. It will take 3 years and I'll pay you amount after 3 years. So you have entered into a contract. After 3 years you need to pay amount, let's say 1 crore, 2 cr, 3 cr. That's a commitment. As of now you are not required to pay, but after 3 years when the building will be done, you are supposed to pay. So estimated amount of contracts remaining to be executed on capital account. Uncalled liabilities on shares and other investments partly paid. Other commitment, if there is any, then you need to specify the nature for that. I hope I'm clear. Any doubt till now, till this point? Clear? Okay. Now I'm going to discuss certain points, okay, where there were amendments also, plus there are additional disclosure requirements over and above notes to accounts. You can say these are the things you need to disclose as a part of notes to accounts only, but they are not directly related to an item into the balance sheet. Okay, like for example, earlier it was there item in the balance sheet like trade receivable. We gave a reference to the note and we were disclosing below. But these are additional disclosures over and above the items which are listed in the balance sheet. Okay, first one, amount proposed as a dividend to be distributed to equity and preference shareholders for the period and related amount per share disclosed separately. Arrears of fixed cumulative dividend on preference shares shall also be disclosed separately. Now, a detailed disclosure on dividends which are proposed and to be distributed, I am required to provide. So, dividends proposed and to be paid. I am required to provide this detail, okay, for the dividend proposed and or required to be distributed. And I am also required to provide details with respect to per share amount. Reason because per share amount will provide, okay, how much of the dividend I am required to provide on each of the share. Plus, if there any dividend on preference shares, I am required to provide that also. Clear? So this is the detail I am required to provide. Now, this is why I am saying additional information is because this information earlier, you can say, okay, there is no line item on the face of balance sheet with respect to the dividend, but still I am required to provide that detail. Okay, clear? Okay. Then, where in respect of an issue of security made for a specific purpose, okay, issue of a security made for a specific purpose, the whole and part of the amount has not used for the specific purpose at the balance sheet date, there shall be an indication by way of note how such unutilized amount has been used or invested. So for example, it talks about utilization. So when remember in most of the IPOs or FPOs, you might be seeing why the company is raising these funds. Let's say company is raising these funds for the purpose of further expansion. Now, whether any of the part of that particular IPO or funds raised or issue, through IPO. So whether these funds have used for the expansion or some of the funds are lying idle in the bank account. So how these unutilized funds have been used. So the focus over here is unutilized amounts, how they have been used or invested. Okay. You need to provide detail for that. Then, where the company has not used the borrowing from the banks and financial institution for specific purpose for which it was taken at the balance sheet date, then disclose the details where they have been used. If you are not used, if the company has not used the borrowings, then they are required to disclose, the company shall disclose the detail where they have been used. Now remember guys, one of the confusion you might have is who need to disclose these details. These details are required to be disclosed by company, because these are the part of, this information is a part of presentation and part of your financial statement. Okay, you might say, okay, there is something related to this particular item in Caro also, but over there the comment is given by auditor. Here the details are given by management of the company. This presentation and preparation of financial statement is the responsibility of the company. So these details are given by the company. We, as an auditor of the company, we audit this particular information and validate whether these are true and fair or not, and express our opinion. Clear? So we are not the one who are providing these details which are contained in schedule 3, but it's a part of responsibility of management. I hope I'm clear. Any doubt guys till now? Any doubt? Okay. And remember guys, this one, this VA1 is an amendment which was not present earlier. Okay. Now, okay, W. So, if in the opinion of the board, any of the asset other than plant property and equipment, property, plant and equipment, or intangible and non-current investment do not have a realization, do not have a value on realization in ordinary course of business, at least equal to an amount which they are stated, then the fact that the board is opinion shall be stated. Means if board feels that either plant property and equipment or intangible asset and non-current investment, okay, if they do not have value on realization, means they do not have value on realization, okay, at least amount equal to which they are stated, means book value. If they don't have value equal to on realization equal to book value, let's say asset is shown on 100, but if I'm going to sell that asset and if I don't have, if I'm not going to get that amount of rupees 100, I am going to get less amount, then I need to disclose that fact. Okay, board is required to disclose that particular opinion in the balance, in the financial statement. Now we are talking about asset other than plant property of equipment, intangible and non-current investment. Clear? So no value on realization. Now remember, earlier the terminology that was used for this particular clause was different. Reason because earlier we were using asset other than plant property and property, plant and equipment and non-current investment. Now tangible, intangible assets are also added over here. So this intangible portion we are talking about here, you can say is a part of amendment. Okay. Any doubts, guys? Any doubt? Now the next topic over here is additional regulatory information. Guys, this additional regulatory information is pure amendment, which is a new requirement for the first time. Okay. So all these details that we will discuss will be the new requirement for the first time. These are the part of amendments. Any doubt till now? See, Vidula, claims against the company not acknowledged as a debt and disputed trade payables. Disputed trade payables means there is an amount of trade payable, but there is a dispute going on. Okay, when I will receive, dispute can be not only with respect to the amounts, can be on any other term also. Okay, can be when it will be paid. Okay, how it will be paid, whether it will be paid in terms of partial like installment or one shot, can be various things. When I say disputed, even let's say for example I have shown full amount. Okay, let's say someone is asking me 100 rupees, I have provided 100 rupees, but I am saying still I'll dispute this 100 rupees. So 100 rupees is provided fully, but it is a disputed one. When I say 100 rupees, someone is asking me 100 rupees, you need to pay the trade payable, I'm saying I'll not pay, and I have not acknowledged that amount as a debt, that will be shown claims against the company. Clear? Yes, Jay, it will be, because on the plain reading it is shown, so it will be. I hope I'm clear. Any further doubt, guys? Thank you, Srinidhi. Okay, guys, what we'll do is we'll take a quick break of 10 minutes over here. Okay, meanwhile in break, get refreshed and get ready for the notes. Take up the notes, because these are the critical parts. These are the amendments, and we'll discuss in detail. So, okay, let's take a quick 10-minute break over here. Nisar ji. Okay, thank you. Okay. Hello everyone. Welcome back. Okay. I hope everyone is recharged. Now let's start with the amendment portion quickly. Okay. So guys, first one. These are the additional regulatory information that are required from us now. Okay. Additional regulatory information. So what are these additional regulatory information that the company is required to disclose in their financial statement? Not the auditor, but company. Okay. First, title deeds of immovable property. Title deeds of immovable property not held in the name of company. Now the company is required to provide where the title deeds of the immovable property are in the name or not in the name of company but are in the someone else's name. Okay. So the company shall provide details of all immovable properties except for the lease and lease agreement, other than for the properties where the company is lessee and lease agreement are duly executed in the favor of lessee. Okay. Whose title deeds are not held in the name of company. Okay. Or and such immovable property jointly held with others. So you need to provide that particular detail. Okay. Now what is the detail required over here is relevant line item in the balance sheet. Okay, where it is, like whether it's in plant property and equipment, land. We are talking about immovable property. Okay. So plant property and equipment, land can be there, building can be there, investment property can be there, or plant property and equipment, or held for use, held for disposal. So where that particular item is lying as of today in your balance sheet, first you need to provide that detail. Number two, description of the property. Let's say my item is falling under the head of plant property and equipment. So land is also there, which is immovable property. Building is also there, which is immovable property. What is the item we are talking about over here? So land, building, whatever the nature of item is, description. Gross carrying value in your books. Title deeds held in the name of. Let's say title deeds is one in the name of one of the director. So director's name will be over here. Okay. Then whether the title deed holder is a promoter, director, or relative of the promoter, director, or employee of the promoter or director. Who is the guy under whose name the property it is? Either it's a promoter, director, or either it's a relative of promoter, director, or it's an employee of promoter or director. Relative means relative defined under the Companies Act. Okay. So you need to provide who is the person, like what is the relation. We can say, okay, he's a relative of promoter, he's a relative of director, he's an employee of promoter or promoter himself. Property held since which date? Since which date that person is holding that property? And reason for being held in the name, not in the name of company. Okay. Reason why the property is not in the name of company. All these details are required to be given now by the company in their financial statement. Basically, why? Reason because it happens at times. Okay. Company has a land, but this land is not in the name of that company, although it is reflected in the books of accounts, in the financial statement, but the title deeds are not with the company. Let's say I'll give you one hypothetical example. Okay. ABC Limited was having land on which it was having factory. So factory land, I can say factory land of rupees 25 crore in his books of account. ABC Limited took a loan for expansion, okay, by keeping that land as a collateral or security, by keeping that land as security. Okay. And that loan was for, let's say, 30 years. 30 years loan was there. It was taken in, let's say, 1991. Okay. So 1991 to 30 years. 2000 one let's say 2000, well, I'll make it so more than 2001, 30 years from that, so 2032, okay, or 2031, whatever it is, till 2031 it will be, loan will go on. Now as a part of the security, as a part of the loan, title deeds were submitted to bank. Title deeds were submitted to bank. Okay, now in this case, let's say for example, this is the whole normal scenario of a loan we are taking, company is taking. Usually when we do audit, usually it was seen that while performing or while disclosing this particular transaction, companies were never used to report under whose name this 25 cr land was. At times these lands are in the name of promoters. Okay, and when any company collapses because of any XYZ reason, at that time, okay, this security, now because the security is on the promoter's land, so what will happen is this security, to the extent, like in this loan there will be two bifurcations, two applicants, company and promoter both. Okay, so after this particular security, let's say loan was of only 5 cr. So once the 5 cr loan is recovered after this property, so rest 20 cr will go to promoter, because the land is of promoter, not of the company, but it was disclosed in the books of account of company. So who is the real owner? Promoter is the real owner of the land, but promoter is not showing in his books of account, rather company is showing in books of account, but title deeds are in the name of promoter. So to avoid this confusion, to avoid this type of manipulations, this provision was came up with, like to disclose, okay, where the title deeds are not in the name of company, it should be separately disclosed. It doesn't mean that, okay, land is there since last 30 years in the books of account, that land belongs to the company. No, it may happen the title deeds are not in the name of company, and there can be XYZ reason for that. There can be numerous reasons. So for example, when the plot was purchased or land was purchased, company was not into existence, that's why it was purchased in the name of promoter. XYZ reason can be there. So you need to understand what is the reason, and the company needs to disclose all these things as a part of this amendment in the financial statement. Same way, when we will discuss CARO, we will see auditor's responsibility with respect to this transaction. So there will be auditor's responsibility in the CARO also with respect to this transaction. We'll see at that time. But as of now, park it that, okay, the company needs to disclose where the title deeds are not in the name of company. And these details the company need to disclose. In whose name, what is the relation of that person, since when the property is, he is holding that property, and why it's not in the name of company, the reason. Clear? Second, where the company has revalued its plant property and equipment, the company shall disclose whether the revaluation is based on valuation by registered valuer as defined in the rule 2 of company's registered valuation valuers and valuation rules. Okay, so the company needs to provide whether the revaluation is based on the valuation by registered valuer, or it's some normally done by the company itself. This will provide a credition, or you can say a credit, or a sort of good standing to the revaluation which is done, so that revaluation is appropriate or not. Okay, you can say, okay, for example, if the revaluation is done by the company, so the stakeholders will be much more aware, okay, this revaluation is done by the company, not by the registered valuer. So registered valuer valuation can be different, may be different. Okay, just to provide that disclosure. Third, following disclosure shall be made for the loans and advances. Remember, loans and advances in the nature of loans granted to promoters, directors, KMPs, and the related parties. Okay, now when a loans and advance is provided to the promoter, director, KMP, or related party, we already disclosed above. We already disclosed that amount above. Where? I'll show you. See, loans and advances to related parties. Okay, we already provide the details. Already we provide the disclosure for the loans and advances to the related parties. Okay, and also where loans and advances in where the directors and officers are involved, we also provide these details again separately where the directors and officers are involved. But to make sure that the disclosure is sufficient and to make sure that disclosure is complete, nothing is left out. Okay, because related parties, loan to related parties, in past there have been many issues. Okay, transfer of funds from one company to another, providing loans to the related parties in lieu of dividend or profit share. There are many things which have happened in the past. Just to make sure these details come out appropriately, this disclosure is required. So repayable on demand or without specifying any terms of period. They need to provide, okay, type of borrower, what is borrower, director, KMP, related party, amount of loan or advance in the nature of loan outstanding, percentage of total loans and advance in the nature of loan which is outstanding. So remember, it talks about loans and advance in the nature of loans. In the nature of loans. When I say loan, it has a terms. It may be repayable on demand or it's without terms, specifying any without terms. So that is the detail that is required to be given. Now you must be wondering to whom it is applicable. I'm talking about division 1 companies to which AS is applicable. So it will include private limited companies. As of now, if you can see, there is no exemption or certain details given, okay, to whom it is applicable. I am talking about companies to whom division 1 is applicable. So to them, this is also applicable. Important part. So okay, let me write down. This is first your additional area is title deeds. Second additional area is registered valuer. For revaluation. Third area is loans and advances as loans to directors and others like KMPs, related parties and promoters. Fourth area, CIP schedule, aging schedule. This is a very important one. Capital in progress aging schedule. Okay, where you need to provide project in progress, project temporarily suspended. What is the amount of CIP in aging schedule? Now I'll give you why this is required to be disclosed. There were companies or there were instances it was noted that in balance sheet since last 10 years there was an amount in CIP standing. Every time when auditor were going, okay, the work is going on, something is being constructed, they were seeing constructing activities, but somehow it was not coming up on the financial statement. Okay, since how long this CIP is standing there in your balance sheet? So for example, take up any books, any financial statement. I'm not talking about division 2, not in AS1, AS1. If you say CIP, do you have a detail since when this CIP is there in the books of account? Let's say, for example, I'm building up an asset which is since 10 years. After 10 years, when I will build that asset completely, will be the, let's say, for example, if I invest 10 CR amount in that building of that asset over 10 years, when the asset will be ready, do you think that asset will be appropriately fine? Or there are chances that it may be outdated because it took us so much of long time for the construction? Or there might be a scenario that, okay, the portion which was created earlier since 10 years and the portion which is created now, there will be difference, and the portion which was created, let's say, earlier may require repair maintenance again because already 10 years has passed. So to show this, since how much of long time company is building a asset, operational efficiency and everything, this disclosure has been came up with. So over here, two things. One, project which are in progress, project temporarily suspended. These both details are required to be provided. By this way, stakeholders will have a clear-cut understanding, okay, there is a CIP, but let's say, for example, total CIP is my 200 CR. Out of that 200 CR, 150 CR is for the projects which are suspended temporarily. Means they are not going, the company is not continuing those projects as of now because of XYZ reason. 50 CR is projects which are in progress. Although your balance sheet will show 200 crore CIP, capital work in progress. You will see a huge number. Oh, companies building big assets. But out of that big assets, 150 CR will be temporarily suspended. Means you are not going to see in the near future. And at times you might need to provide impairment on this capital work in progress. You need to, write off some of the capital work in progress. You need to impair that asset. Reason because it may happen the amount that you are having in your balance sheet, that the amount will not be accurate. You might not be, what you say, realize that much amount or that much benefit from that asset in future, because that is suspended temporarily because of XYZ reason. There can be X number of things. Again, another detail which is required to give is the capital work in progress whose completion is overdue or has exceeded its cost compared to the original plan. Third area, very important. Now, till now we discussed which are the project in progress, which are the project temporarily suspended. Now, the third area, which is for the capital work in progress whose completion is overdue. Now, for example, there was an asset which I was creating, which was supposed to be completed in 3 years, but since last 10 years, I'm creating. It was original plan of 3 years, but since last 10 years, I'm creating. Okay. Then company needs to provide that it has been overdue and it has exceeded the cost it was planned for. Let's say I planned cost of 3 CR, but I have exceeded now and become 10 CR the cost. It is a concern. That concern is required to be disclosed in balance sheet in the way the format is given over here. So completion schedule plus completion schedule is required to be given, like, okay, to be completed in less than 1 year, 1 to 2 year, 2 to 3 year, more than 3 years. So for example, whatever projects are going on, if I'm saying, okay, these projects will be completed in future, then what is the timeline I'm expecting? So that people can track, stakeholders can track, okay, in past, they also, now from now onwards, let's say I say with less than 1 year, it will be completed. But next year, when they will see whether it has been completed within 1 year, answer is no. Yes, they will be having more clarity on CWIP. I hope I'm clear why this amendment is brought and what is the logic behind this amendment. Any doubt, guys? This is a very important thing to understand. Vidula, good question. Why we are not considering, so in one of in previous title deeds clause, why we were not considering the amount paid for the purchase of land which was in the name of promoter. Now tell you the reason why. Let's say for example, land was purchased 30 years ago when the amount paid was only 50,000 rupees. Now the land has a value of 10 CR. Do you think that 50,000 rupees will be that much of what you say importance compared to the current gross value of that particular asset? Most of the time we saw, unless and until there is a revaluation, we saw on the cost only. The amount gross carrying value is a cost only. So by default, that consideration paid will be covered over here. So that's why the focus is on the gross carrying value rather than the consideration, because gross carrying value will consider your cost, that amount you have paid, plus any other revaluation which is done for that particular land. I hope I'm clear. Any doubt, guys? Any doubt? Understand the logic behind these amendments and trust me, you will understand. Okay, you will be able to answer questions on these. Understand why these amendments were brought. What is the thing that government is expecting to companies to disclose, and why it is expected from them to disclose. Okay, there will be no need to mug up, and there will be no need to just blindly remember learn things, mug up things, unless and until if you understand the logic, it will be very pretty much easy for you. Understand what was the mischief why these amendments were brought. Same way, the way we talked about capital work in progress, the same way the details are required to be given for the intangible under development. Means intangible work in progress. So we are required to give details of intangibles. Okay, since how much of time they are, what is the aging of intangibles under development? Less than 1 year, 1 to 2 year, 2 to 3 years, more than 3 years. Okay, see, total shall tally with the amount of intangibles under development in the balance sheet. So aging amount should tally with the amount which is in the balance sheet. Also, I need to provide completion schedule when I'm planning to when these details capital intangible work in progress or intangible under development will get completed. And also, just maybe a small thing, just I'll tell you, when we use word, we use capital work in progress, CWIP. Okay, capital work in progress. When I use for intangibles, I say intangible assets under development. Try to maintain these terminologies because these are the terminologies specified in Schedule 3, Division 1. As I told you, fixed asset, property, plant and equipment, although it may appear same, but there is a difference between both of them. In the same way, if I use, for example, capital work in progress and intangible work in progress, they are same, but somewhere they are not accurate. So that's why intangible under development and capital work in progress, two different things. Okay. For intangibles also, I need to provide who is overdue of completion and exceeded its cost. So in both of the areas, what you need to disclose? One, aging. Second, okay, under aging you need to provide which are in progress or which are suspended. Second, you need to provide overdue and exceeded its plan cost. What was budgeted and original plan. Okay, plan cost. Third, completion schedule. These three things. One, aging. Aging should have a bifurcation between in progress and temporarily suspended. Second, overdue and exceeded its planned cost. Third, completion schedule. Same way, I need to provide details for intangibles. Aging, which is in progress and suspended. Second, my overdue and exceeded plan cost. Third, completion schedule. Clear? Any doubt for this particular topic? Jay, it will be shown by way of a note. So for example, let's say project 1. So we can say the project 1 was planned. The plan cost for the project 1 was rupees 10 crore. However, till date, the company has already incurred 20 crore on the project. That is how you can show under CIP schedule, CWIP schedule. Any doubt, guys? Okay. Same thing we will see in division 2 also, but I'll just taking you to that. Okay, it will be there. Then details of Benami property. Benami property means these are not anyone's under name. These are names on the. There is a definition provided under the act, but to simplify, okay, the property which is in the name of Mr. X, but Mr. X is fake. He's not present. He's not a real person. So that's a Benami property. Hypothetical example, simplifying the thing, but there is a definition given under the act itself. You need to refer to the act for detailed definition. Just for the sake of simplicity, understand. Let's say, for example, there is a property, land is in the name of Mr. X, and Mr. X is a fake identity, not a real identity. So where any proceedings have been initiated or pending against the company for holding any Benami property under this particular act, we are referring over here, Benami Transactions and Prohibition Act. Okay. And rules thereunder, the company shall disclose the following: details of such property, including year of acquisition, amount thereof, details of beneficiary. If property is in the books, then reference to the item in the balance sheet. If property not in the books, then facts stated shall with the reason. Okay. Also, where there are proceedings against the company under this law as an abettor of the transaction or as a transferor, then details provided, nature of proceedings, status of the same, and company's view on the same. Now understand what is asked here is, first of all, when there is a proceedings going on. Why am I emphasizing proceedings which is initiated or pending? Reason because it is not necessary the company is found guilty or held guilty under this particular act, or company has been held guilty for the contravention or non-compliance with the provision of this act. I'm talking about proceedings, the outcome of which still is not certain. The company can be held guilty, may not be held guilty. So I'm talking about only proceedings where the outcome is not finalized yet. So if there any proceeding is going on, so what you need to provide the details for the detail of such property and year of acquisition, amount thereof, details of beneficiaries, who are the real beneficiaries or who are the beneficiaries of that property as per the company. If the property in the books, then reference to the item. If the property is not in the books, then the fact that the property is not in the books and the reason why it is not in the books. Where the proceedings are against the company under this law as an abettor of the transaction or as a transferor, then the details. Okay. And the nature of proceedings, status of the same, how much at what stage the proceedings are, and company's view on the same. Again, this is a very important area. Reason because same we will be seeing in the CARO also. This is a responsibility of the company. Our responsibility will come in the CARO. I hope it is clear. Any doubt? See, Jay, if there is a disagreement on the reason, okay, for not holding immovable property in the company's name or the company, if let's say for example company disclosing at that time there was some emergency, that's why we were not able to purchase the land in the name of the company and director purchased it, and you disagree with that particular what you say reason, then you can report that particular thing in your audit report also. Depends upon how much materiality it is, you need to consider from the reporting point of view. You can bring attention in your audit report on this particular, you can modify your report. Plus there will be a place in CARO, if it is applicable to that particular company, you will be reporting on these particular area also. So if there is a disagree, then try to understand why there is a disagree, communicate to the management, communicate to those charged with governance, make them understand why there is a disagreement and what is the correct way to disclose. If still they do not agree, then you can disclose in your audit report that okay, there was something which was disclosed by the management which we feel is not appropriate, and it can be material into the nature, but we are not able to ascertain its impact. Okay, you cannot ascertain the impact of the reason. So it may happen, you may show okay, not material, you might not be qualified, but depends upon case to case how are the facts of the case. Any further doubt, guys? Any further doubt? Any further doubt? Just give me a minute. Okay, no issues. Let's move forward then. Okay. Where the company has borrowing from banks or financial institution. Okay. On the basis of security of current asset, it shall disclose the following. First, whether the quarterly returns or statement of the current asset filed by the company with banks or financial institution are in agreement with the books of accounts. Number two, if not, summary of reconciliation and the reason of material discrepancies, if any, to be adequately disclosed. See, this is the company is required to provide the additional information. We are required to verify the same, but company is required to provide. So the company needs to report whether the quarterly returns contains the information which is in alignment with the books, which is in agreement in the books of account. Number two, if not, summary of reconciliation and reason for material discrepancies. Okay, so these are the things that company need to provide. Our role will come in Caro for this item also. So quarterly returns of current assets to bank, okay, and their agreement with the books of accounts, the reason for material discrepancy also. Okay, important topic, willful defaulter. Where the company is declared a willful defaulter by any bank or financial institution or any other lender, then date of declaration as willful defaulter, details of default. Now, willful default is a willful defaulter means a person or an issuer who or which is categorized as a willful defaulter by any bank, financial institution, or any consortium thereof in accordance with the guidelines of willful defaulter issued by the RBI. So if a bank or financial institution categorize a company as a willful defaulter, then that disclosure is also required to be given. Reason because for the stakeholders, it will be easy to understand, okay, the company is a willful defaulter, means company has deliberately defaulted, and the stakeholders will be required to disclose the same. Clear? Okay. Any doubts till now? Any doubts? Any doubts, guys? Just a minute. Okay. Okay, yeah. So any doubt, guys? Any doubt? Okay, Mahendra, Benami property means, let's say for example, there is a property which is in the name of Mr. X, but Mr. X is a fake identity. For example, I'll just take you a hypothetical example. Let's say for example, I created a fake identity for the documentation purpose. Let's say my name Harshad Tekwani, or I'll add some more thing to it. Let's say Harshad Tekwani Khan, whatever, fake identity. Okay. Now a fake identity is being created. Now a property purchased in the name of fake identity. Earlier, it was somehow, people were forging the documents and purchasing the properties in this way. So these things, like fake identities, like were created, and on the name of that the property was purchased. So they are known as a Benami property. But there are further nitty-gritties and integrities to the particular section of definition. You need to read it for further details on it. See, movable properties, title deeds for movable property is not easily, available. So for example, let's say there is a movable property, and when I say movable property, let's keep aside the immovable, land and building. Other than what is there? Plant and machinery. Then you have vehicles, office equipment. Now for them there is no title deed. We verify the invoices and vouchers for that particular items, and when there is an addition, we verify whether the addition voucher or invoice is in the name of company or not. Let's say for example, mobile property computer, I purchased a computer. Now it may not have a title deed, but it will have an invoice, and whether the invoice is in the name of my name, I will verify at the time of addition. Yes, Vidula, they are. Any further doubt, guys? Any further doubt? Okay, let me move forward. Then there is a relationship with struck off companies. Now, what is the relationship with the struck off companies? Struck off companies means their name was removed from the name registers of companies. Okay. Now the point is, hello, am I audible? Yeah. Okay. Sorry for the technical glitch. Yeah. So name relationship with the struck off companies. So for example, company has entered into a transaction with a struck off company. Now the name has been removed of that particular company. Okay. Under section 248 of the Companies Act 2013 or section 560 of the Companies Act 1956, whatever it may be. So you need to provide details of that particular transaction with the struck off company. Whether there is an investment in security of that company, receivable, payable, share held by stock of company, whatever can be. You need to provide the transaction detail, name of the company, balance outstanding, and relationship with the company. What was the relationship? Whether the company was related, that is required to be disclosed. And why this disclosure has been made mandatory? Reason because at times companies were investing in companies which were later getting off stock off, like fake companies. Okay, companies, they were shell companies, so their name was struck off. So investment in shell companies, receivable payables with the shell companies. Now let's say for example, during the year company wrote off some of the amount of receivable because it was with the shell company and the company's name was struck off. How a stakeholder will come to know that such transaction was existing? We will say, right, we will see, okay, bad debt written off, we'll see the receivable has been reduced. Do you have the detail whether it was with the struck off company or not? That's why now companies are required to disclose this type of transaction. It will give immense clarity to the stakeholders. Registration or charge or satisfaction of charge. So whether any charge or satisfaction yet to be registered with registrar of companies beyond the statutory period, provide the details and reasons thereof. So pending registration or satisfaction of charge. Compliance with the number of layer of companies. So company, if the company has not complied with the number of layers prescribed under clause 87 of section 2, okay, where there is a restriction on the number of layers, like where there is a restriction on the number of layers, like more than 2, there is a specified provisions, but over and above overall, you know, 2, not more than 2 layers. Remember something? So you need to provide that if the company has not complied with the number of layers provision, which is mentioned in clause 87 of section 2, then the name and the SIN number of the companies beyond the specified layer, relationship of the holding company in such downstream companies shall be disclosed. Okay, so first of all, I need to provide the name and the SIN number of those companies which are exceeding the specified layer. Number 2, what I'm required to provide is how much of the holding is there and what is the relationship. Okay, so 2 things: SIN or beyond the specified layers, SIN and name of beyond the of companies beyond the specified layer, relationship and extent of holding in those companies. These 2 things. Clear? Non-compliance to the number of layers rules, you can say. Also, ratio analysis. Now, ratios are required to be disclosed as a part of financial statement by the company. Debt equity ratio, debt service coverage ratio, return on equity ratio, inventory turnover ratio, trade receivable, trade payable turnover ratio, net capital turnover ratio, net profit ratio, return on capital employed, return on investment. Okay. The company shall explain the items included in the numerator and the denominator computing the above ratio. Further explanation shall be provided for any change in ratio by more than 25% compared to the previous year. So not only for the current year, let's say current year number, previous year number, if there is a 25% change, okay, then you need to provide the reason thereof. Plus, when I say numerator and denominator, items included in numerator and denominator means the formula that I have been using to calculate the ratio. So for example, let's say net profit ratio, simple one. Okay. So what I am taking to calculate this ratio? Net profit, like which net profit? Before tax, after tax, which one? Okay, let's say after tax and my total turnover can be whether total turnover including my discontinued operations or not, whatever. So I need to explain the denominator and the numerator both, whether it's from the continuing operation, whether it's for also include discontinued operation, whether include the turnover includes only operating revenue, not the other income, whether it includes total income, whatever it is. I need to explain what is the numerator and what is the denominator for each and every ratio. So ratio analysis is a part of financial statement now. Compliance with approved scheme of arrangements. So if there is a scheme of arrangement that has been approved by competent authority, okay, then the company shall disclose that the effect of such scheme of arrangement has been accounted for in accordance with the scheme and in accordance with the accounting standard, or any if deviation is there, then shall be explained. So you need to explain compliance with scheme of arrangement. And deviations, if any, there are. You need to explain if any deviations are there with respect to the scheme. Now, when I say compliance, compliance shall be in two terms, in accordance with the scheme and in accordance with the accounting standards. So compliance in accordance with scheme, in accordance with accounting standards. Clear? Utilization of borrowed funds and share premium. So, any doubt till now, guys? Any doubt? See, Vidula, there can be, a struck of name has been struck off by the registrar itself. Not necessary we have filed an application. Number two, there can be, investment in that particular company. So for example, we were the like we have invested in that company, we bought the shares of the company. It will be still there. It will be part of that, still that part of the company. So relationship not only with respect to the payables or one of the revenue transactions, it can be of capital transaction. Like I have invested in the equity share of the company, preference share of the company, something like that. Or company was my shareholder. It can be vice versa. Okay. Utilization of borrowed funds and share premium. Okay. Where the company has advanced any loans or invested funds, advanced or loaned or invested funds, okay, to any other person or entity, including foreign entities, okay, with the intermediary, okay, and everything. Then, with the understanding that the intermediary shall directly or indirectly invest or lend in any other person, okay, in the manner, or provide any guarantee to the ultimate beneficiary, okay, and you need to disclose the details of that particular that fund or advance loaned by the intermediary to the each of the what you say ultimate beneficiary. So what this clause asks for example, if you are giving a fund, if you are borrowing a amount, okay, if you are providing a loan to someone, let's say for example X Limited, okay, the company has loaned rupees 3 cr, okay, the company has loaned 3 cr to, let's say, Y Limited, with the understanding that now Y Limited here is an intermediary. Y Limited is an intermediary over here that we are talking about. He is not the ultimate beneficiary to whom the loan was supposed to be given, but he's the intermediary. Now, let's say Y Limited is the intermediary. Now, with her understanding, the loan was given to Y Limited because it was said that, okay, directly or indirectly, Y Limited will, okay, directly or indirectly, Y Limited will lend or invest in any other person or entity identified by behalf of a company. Okay, so Y Limited will invest, let's say, in Z Limited. So with this understanding, the amount was given to the Y Limited, that Y Limited will invest in Z Limited. Z Limited will be known as a ultimate beneficiary. Okay, so your company needs to disclose that, okay, any amount was given to any intermediary with the understanding that directly or indirectly Y Limited will invest in Z Limited, that is ultimate beneficiary, which is identified earlier only by X Limited. Number two, that Y Limited will provide any guarantee, security, okay, to or on behalf of ultimate beneficiary. Okay, whether Y Limited will provide any security or guarantee on behalf of Z Limited. If yes, then the company shall disclose the date, amount of fund advanced or loan or invested in the intermediary with the complete details of each intermediary. Means how much of the amount I have given to Y Limited. So here amount from X Limited to Y Limited details. Okay, I need to disclose the details of this. The amount which flowed from X Limited to Y Limited 3 CR. Date, amount of funds further advanced or loaned invested by such intermediary or other intermediaries or ultimate beneficiary along with the complete details of ultimate beneficiaries. So amount transferred to Z Limited by Y Limited. That is the detail we are talking about. Date and amount of guarantee or security provided or to be on behalf of ultimate beneficiary if I am providing any security on behalf of Z Limited, and declaration relevant to the provisions of Foreign Exchange FEMA Act, okay, Companies Act for transaction, for such transaction, and the transaction are not in violation of Prevention of Money Laundering Act. So you need to provide a declaration, okay, this transaction is in compliance with FEMA, Companies Act, and not something where the violation of money laundering is happening. Okay. Clear? Any doubt for this particular first part? Second part talks about where a company has received any fund from any person, entity, including foreign entity, funding party, with an understanding whether recorded in writing otherwise that the company shall directly, indirectly lend, invest in other entities or entities identified in manner whatsoever on behalf of funding party. So till now we were X Limited. In point A we were X Limited. Now in point B we are Y Limited. So X Limited is funding party. X Limited is providing amount to Y Limited. Now we are Y Limited, company. Now we are Y Limited over here. We are beneficiary. Oh, sorry, intermediary. Okay, we are Y Limited now. Earlier we were X Limited. It was funding party. So now we need to provide disclosure. Means company need to provide disclosure from the intermediary point of view. Okay, then what is the disclosure we need to provide? That date and amount of fund received from funding party, complete details of each funding party, like amount received from X Limited, date and amount of fund either advanced or loaned or invested in other intermediaries or ultimate beneficiary and details thereof. So if we provided the loan further to Z Limited, ultimate beneficiary, then we need to provide details of amount given to Z Limited, date of guarantee or security provided on behalf of ultimate beneficiaries, and declaration relevant with respect to this particular declaration of FEMA plus Companies Act plus Prevention of Money Laundering Act. Okay, declaration FEMA, Companies Act, or Prevention of Money Laundering Act. Clear? In both of the cases, earlier in just a minute. we are Y limited in A B clause, and earlier we were X limited in A clause. Clear? If X limited is providing any loan to the Y limited, okay, here is loan given to Y limited, or if we are providing any security or guarantee on behalf of ultimate beneficiary to the Y limited. So guarantee to Y limited on behalf of provide any guarantee, security to or on behalf of ultimate beneficiary, okay, to Y limited on behalf of Z limited, then we need to disclose all these details. In second case, B scenario, if we are Y limited and someone has provided us a amount, okay, or someone has provided us a guarantee on behalf of Z limited, then B clause, we need to disclose the detail, that amount received from X, guarantee received from X, amount passed on to Z, okay, and plus declaration. Any doubt till now with respect to any of the clause or this clause? Any doubt? Guys, understand the logic why these details are required to be disclosed. Understand not only the words but the technicalities. Okay, what is the thing we are required to disclose? And I'm sure that there will not be a hardship to remember these things. Trust me. The reason I'm telling you, because these are for some logic, these amendments are for a purpose. Understand the purpose, you will able to answer your questions easily. And these are correlated with one another. So we will see some of the same things in Caro also. Okay, even some of the same things were already there in the schedule 3, and they are somewhere linked with the provisions of the act also, Companies Act. I hope I am clear. Any doubt, guys? Any doubt? No doubts? Then let me take me forward then. Part 2, profit and loss account of division 1. Okay, what part 2 talks about? How you need to disclose the P&L at the format of the P&L account. Okay, which talks about revenue from operation, other income, then it becomes your total income. You need to then start with expenses, then cost of material, purchase of stock in trade, change in inventory of finished goods, work in progress and stock in trade. So change in inventory of finished goods, change in inventory of work in progress, and change in inventory of stock in trade. Then employee benefit expense, finance cost, depreciation, other, that will make your total expense. If you compare the both total expense and total revenue, you will get profit before exceptional and extraordinary items and tax. Exceptional items you will include, then profit before extraordinary items. If you include extraordinary items, then profit before tax, and then tax expense, which is your current and deferred tax. Then it will be profit and loss from continuing operations. Then you will add profit and loss from discontinued operations, tax expense from discontinued operation. You will get profit or loss from the discontinuing operation, and if you add up these both, okay, you will get profit and loss for the period. Then you need to calculate EPS, basic and diluted. Then there are general instructions to the profit and loss account, which talks about, okay, what shall be, my finance, other than a finance company, what shall be revenue? For other than a finance company, my revenue shall be sale of product, sale of service. Then you can say grants or donation received in case of Section 8 company. Other operating revenues, then you need to deduct excise duty. In case of a finance company, it will be interest and other financial services. Okay, that of revenue from other financial services that will be disclosed. Then the general instructions for the profit and loss account talks about, okay, what are the finance costs shall be interest expense, other borrowing cost, applicable net gain and loss. Same way, they provide information about other income, interest income, dividend income, net gain and loss, and other non-operating income. Okay, now for a finance company, my interest income will become, my interest income will be part of over here revenue, that is interest income will be part of revenue from operations for a finance company. But for a non-finance company, interest income shall be other income. Okay. Additional information, like these are the things that you are required to disclose additionally by way of additional notes. That is employee benefit expense showing salary and wages, then contribution to provident and other funds, expense of employee stock option scheme, employee stock option purchase plan, or staff welfare expense. So employee benefit expense shown should be bifurcated in these heads. Depreciation should be shown separately. Any item of expenditure or income either more than 1 lakh rupees or exceed 1% of the revenue. Remember, exceed 1% of the revenue or more than 1 lakh rupees, whichever is higher. You need to show separately. Then interest income, expense, dividend income, net gain and loss, these are required to be disclosed separately. Adjustment to the carrying amount of investments, net gain and loss on foreign currency translations, then payment to auditors. So payment to auditor as an auditor for taxation matters, okay, for taxation matters, for company law matters, for management service, for other service, or for reimbursement of extent. These are payment to auditor, bifurcation in P&L. In case of company covered under 135 CSR, amount of expenditure incurred on CSR activities. So CSR expenditure. Details of exceptional and extraordinary nature item, prior period items. Okay. In case of manufacturing concern, raw material under broad heads. I'm saying broad head. Not each and every raw material is required to be disclosed, but raw material under broad heads. Then goods purchased again under broad heads. Not each and every. Let's say, for example, I'm doing trading. Okay, wholesale trading of stationery item. In case of raw material, or let's say in case of I'm trading, so goods purchased. So in case of a trading company, okay, which is the next point, purchase in respect of good traded by company under broad head. I will not show, okay, this pen, X pen, Y pen, Z pen, white paper book, without line book. I will not show this much detail. I can show under broad head. Stationery items, then you can say some other items like this way. I need to bifurcate it. Okay, so I need to classify under broad head based on my type of business activity. Then companies rendering or supplying services. Then again, my gross income derived shall be under broad head. Simple. Company when falls under more than one category means I'm supplying services also, I'm part of trading also. Then again, A, B, C will be applicable to the extent it is there. Okay, so for the trading activity, I need to follow B, and for the service, I need to follow C. Simple. Means, in short, I need to show everything under the broad heads. Or in case of other company, gross income under broad head. Not in detailed heading, means detailed bifurcation, but in the broad heads. Okay, clear? Again, in case of concerns having work in progress, so work in progress under broad heads, the aggregate if material amount set aside or proposed to be aside for reserve, but not including any provision made for specific liability, contingency, or commitment known to exist at the date which balance sheet made up of. So amount set aside as a reserve, but not including provision. So if you set aside any amount as a reserve, then that amount is required to be disclosed. If aggregate, if material. Now two things we are talking about here: aggregate, if material. Okay, in total, if that amount is material, then only amount withdrawn from such reserves. Okay, the aggregate if material, amount set aside to make provisions to meet specific liabilities. The aggregate if material means amount withdrawn from such provisions. So three things, two things: amount for reserve or withdrawn from reserve. Second, for provision, same, amount set aside or amount withdrawn. Same way it will be my for reserve. Set aside and amount withdrawn. I need to disclose separately if in aggregate it is material. If material, then only, otherwise not. Okay. Then expenditure on these items are required to be disclosed separately. That is consumption of stores and spare parts, power and fuel, rent, repair buildings, repair to machinery, insurance, rates and taxes, miscellaneous expense. Then dividend from subsidiary company and provision for loss of subsidiary company. You might be seeing, guys, this is a lot of information. Okay, but some of the information you already deal with while preparing the financial statement, and understand why these informations are required separately. Reason because of the criticalness of the items. So for example, see, payment to auditors, it's a very critical thing. What amount is being given to the auditor for what thing? Taxation matters, company law matters, because this decides my independence, whether there is a conflict of interest or not. What if I'm being paid for company law matters or taxation matters higher compared to my audit service? So you need to understand some reimbursement of expense. What if majority of my service or majority of my fees is shown as a part of reimbursement only? Okay, so these are the critical disclosures. CSR again critical. These incomes, employee benefit again critical. So these are the critical items. You need to understand why it is required to be disclosed. What is it underlying thing which makes them critical? Then only you will be able to understand the things and easily write upon in exam. And guys, I'll suggest you to read as much as you can the module, the study material given by ICI practices, because that will enhance your understanding. Also guys, I'll also like to understand from you guys that okay, your feedback, which is very important to us. Reason because if you'll provide your feedback, okay, this is good, this is not, this is we need additionally, it will be very helpful for us, very helpful. Okay, so please provide your feedback. Vidula, with respect to your earlier query, if the transaction parties are not aware there is a violation, and eventually they make, come where then there is a violation. So there are provisions in FEMA compounding of, violation, or then you may need to, self-disclose by a friend that there was a violation, and you need to go for further, like depending upon what type of violation it is. So you need to assess the implication of the penalty or fines on the financial statement. You need to predict, okay, how much of the fine for the violation I will be supposed to pay. You need to make a provision for that, and you need to disclose in the financial statement. That totally depends upon the violation. Jay, can you say which borrowings we are talking about here? A bit of, it will be easy for me. Thank you, Vidula. See, that is the purpose. So, for example, let's say when you are paying to an auditor, okay, including for management services. Now, it's a contravention to section 144, totally agreed, perfectly fine. But this will also ensure, okay, for example, I'll show you one thing. So payment to auditors as an auditor or for management service. So for example, now there is some, other firm which may be related of part of a network, okay, or group of, let's say, other firm which is related to us, or you can say part of a network, but it is dealing into the management consultancy services. Then in that case, you disclose that amount paid to that particular firm also over here. What if the same auditor is taking up management consultancy services, which is not allowed? So by this way, it will also be, you will also be knowing that, okay, amount is being paid for management services which is not allowed. So that disclosure will also help you to keep in check, okay, something inappropriate is not happening. Both ways you can see. Srinidhi, why there is a in actual, yes, they can be read with financial statement to get better understanding, but these amendments, will be for these particular, revised schedule 3. The financials will be start, prepared from after the end of March. So in the month of April or May, these financial will be out. So at that time, I will be, into the better position to discuss with the financials as of today, because as of today we don't have a, real life example of these financials, because the financial year is yet to be closed. Thank you, Vidila. Thank you. Okay. There are some more points. Let's discuss those quickly to close this. Then profit and loss shall also contain by way of the notes information, namely value of imports calculated on CIF basis by the company during financial year in respect of raw material, components, spare part, and capital goods. So we are also now, companies also now required to disclose impact on, details of values of import, details of import calculated on CIF basis. Why? Reason, because this is important part, to understand how much of the import has been done during the year. Expenditure in foreign currency during financial year on account of royalty, technical know-how, professional and consultancy fees, interest and other matters. Reason, because it will give you clarity, okay, how much of the amount company paid outside India to the foreign currency to someone else on these account. Again, total value of all raw material, all imported raw materials, spare part, component consumed during the year, and the total of all indigenous raw materials, spare part, components similarly consumed, and the percentage of each to the component. Imported outside raw materials, indigenous means local raw material, and percentage to the total consumption. For example, during the year I consumed raw material of 100 rupees total consumption, out of which 40 was imported outside India, 60 was within India. This will give clarity, okay, how much of the raw material we are importing from outside and how much we are relying on the local market. This gives the business insight, okay, if we are relying more onto the foreign market or outside India, there are chances that in case of a foreign disruption or something like that, our business might get impacted very much. So this gives a clarity on that point of view. Okay, where we are based more, like on where we are relied more, on the foreign market or on the local market. So value of imported raw materials, value of indigenous raw material, and percentage of them with respect to the each of total consumption. Percentage of each with respect to the total consumption. Clear? Any doubt till now? Okay. Then amount remitted during the year in foreign currencies on account of dividend. Then you need to mention specific to the total number of non-resident shareholder, total number of shares held by them, on which dividend were due, and dividends of which year are related. So if any amount remitted outside India on account of dividend, okay, in foreign currency, then you need to provide details of that. This is why these clauses are there, for prevention of money laundering activity, or to ensure, okay, we are not siphoning the funds outside India in any of the way. Okay, so basically money laundering is one of the criteria for which such provisions exist for the disclosure. Then foreign exchange, earnings in foreign exchange from export of goods on FOB, royalty, know-how, professional consultancy, interest, dividend, other income. This is for the purpose of how much of my income is from outside India. This will also help me in understanding my foreign currency exposure. So let's say if majority of my earning is foreign currency, then I may be more exposed to the currency risk rather than the other companies. So this also helps in understanding currency risk. You will be reading currency rates in in SFM in subject, second subject. Okay, this is the amendment. Okay, undisclosed income. The company shall give details of any transaction not recorded in the books of account. First of all, it's not recorded in the books of account, that had been surrendered or disclosed as an income. Okay, unless there is an immunity for disclosure, immunity from disclosure. Otherwise, you need to disclose. If there is any undisclosed income which is being disclosed under the Income Tax Act subsequently, okay, and which is still not disclosed in the financial statement, then you need to provide details of that undisclosed income. Unless there is an immunity given under that particular scheme by the government, then you need to provide details of CSR. What are the details? Where the company covered under section 135? If yes, then amount required to be spent, amount actually spent, shortfall at the end of previous end of the year, total previous year shortfall, reason for shortfall, nature of CSR activities which were taken, details of related party transaction, okay, relation to CSR, where the provision is made respect to the liability incurred by entering into a contractual obligation for CSR. So all these details are required to be provided for CSR. This is also this one. These were earlier not there. Important details of cryptocurrency and virtual currency. If the company has traded or investment in cryptocurrency or virtual currency, Bitcoin, Ethereum, okay, there are many going on as of now. Dogecoin, very separate coins, or if company is trading or has invested in such currencies, then profit and loss on transaction involving cryptocurrency, amount of currency held as on reporting date. Okay, deposits or advance from any person for the purpose of trading or investing in cryptocurrency. So details of cryptocurrencies. Okay, so these are the things you are required to disclose as per part 1, part 2 of division 1. Any doubt till now? Any doubt, guys, till now? Indigenous means local. Sure, Jay, I'll make sure. Any doubt, guys? CIF means cost insurance freight. It's a shipping term. Visualize, it's the company who needs to present into the financial statement. If company doesn't have appropriate knowledge, they can hire a technician or technical expert or advisor for this particular disclosure. Okay, guys. So what we do is we keep this lecture till this particular point. We covered the division 1. In the next lecture, we'll start with the division 2. We'll try to wrap up and we'll try to start another topic of Caro also. Okay. So guys, please read before start of next lecture, division 2, its amendments, as much as you can, and gather your queries from this lecture, past lecture. Also please provide your feedback so that we can understand what are the things you need additionally, or where we are good or where we need improvement. Please guys, please provide your feedback here also on app also. Thank you guys, thank you very much for participating today, for being present today. Thank you.